So we are dealing with the asset euro trading against US dollar. So euro is now our base, and then US dollar is our quote, which means that this particular signal, we are expecting to see the chart going down. We are expecting the chart to go down, or we are expecting a bearish market. Now, this is what you do. So you go to your MetaTrader platform. So if you are using phone, let's assume by now you know how to set up your systems and everything. You know how to set up everything. So for example, those using PC, you come to the left-hand side for the MetaTrader platform. Then you search for Euro USD. You can just type E and then look for your Euro US dollar. So as you can see, this is my Euro US dollar here. Okay, now we have two types of assets here. We have micro and then the normal US, Euro USD. Now one goes without any extension. Now this is actually based on what your broker is offering you. Okay, now let me take the Euro US dollar. So I open the chart. And when you open the chart, this is what appears on your chart. So the square thing, we call it a grid. That's the grid. That's the square gray line you are seeing. So with that, some people don't like it. It actually used to detect the difference between one pip to another or one price to another, and then micro pips as well. So for instance, if you are the type who don't really like it, you can just take it off, right click and check grid, then it will go. That is how you can. But the truth of the matter is that every signal goes with time. So maybe you are just now coming to place a trade and see if market will go in your favor. All right. Now, we are assuming that you don't know how to backtest a trade, and then you are just entering the trade based on the signal given you. So now our entry price is 1.05637. Now, mostly what I tell people is that sometimes the signal can be given, and within a short period, it can even hit take profit or stop loss. So at that particular moment, see where market is currently, and if possible, check where it has gone. Now, when you leave the cursor on it, you'll see open, high, open, high, and low, and close. All right, so that's just a clue that the current candle that is there, this is how it is behaving, or this is the details of that particular candlestick. So when you put the cursor on it, you're able to see the detail of the candlestick. All right, now with my eyes, the probability of this trade will sell is a little bit high, at least a pips, some few pips down. Now this is what you would do. We have two types of entering a trade. One is the new order method, this aspect. Then the other is just entering the trade, buy or sell. Okay, now the new order mostly is for, probably I use it for pending orders. Okay, because once I'm with the machine and the signal is given and it's a market execution. Market execution means you just place your buy or sell, and then the market takes the trade for you immediately. Okay, so let's assume you are going to use just the direct entry, the buy and the sell here. Okay, so we have a space in it with 0.5. In most cases, when you open an account or you open any broker account or MetaTrader, in most cases you see 1.0. In most cases, it will be 1.0. But the truth is that now this time is being wasted because we are learning, all right? But if you are going to enter a trade, you wouldn't waste all this time. You have to be a little bit timing. Sometimes to delay is not denial, and you don't rush for the market because now you don't waste any opportunity, or you won't lose any opportunity at the end of it. So at that particular point is where you put your lot size. Now let me just your lot size. Now with this lot size, you are telling the broker how much you are willing to lose or gain per move of the market. Okay, so you see market is moving 1, 2, 1, 2, 1, 2, either in the direction you expect it to go or the direction you don't expect it to go. That's against you. Okay, so your lot size just means that, let's say you want to, per move or per pip, you want to see negative 0.01 or negative 0.1 or negative 1.0 or negative 10. That's I'm mentioning dollars. And this decision is based on your equity, how much you are trading with, all right? And also your trading plan. So before you open the MetaTrader, each day, you already know what you want to do, waiting for a signal. That is if you are someone that goes with signal. You already know what you do. You know how much is in your account. You know how much stop loss you are ready to, or how much you want to lose that day, how much you want to gain that day. When market is very good, it goes in your favor. Okay, are you going with break even? What reward ratio are you going with? All those things you are already set with it. Now, so with my equity, let's assume I want to use 0.05. Let's assume I want to use 0.05. Now, don't forget, this is not a signal you analyze by yourself, but it's a signal they give you. So as they give you the signal, risk to reward ratio goes according to the person that generates the signal. So you must now apply proper risk management to the signal. Okay, so what I will do is I will just click on sell because I've already input the lot size. So now I want to have peace of mind by setting my take profit and stop loss. Setting my take profit and stop loss. Now let's drop it down to this bottom. Now when we come to the bottom here, we now have a few stuffs. We have time of the trade, the ticket, the time goes with the date, the action or type of transaction you've done. You went for a sell. The volume is your lot size. So the lot size is 0.05. Then the price, we have 0.662. And then the current price is this particular price, which is 1.056. And then it keeps moving. It's not stable, right? Now you see stop loss, nothing is there. Take profit, nothing is there. Now we want to do that, okay? So you just enter the trade and you want to set your stop loss and take profit. So what you do is you just double click. That is for PC users. Phone users, you press the trade and hold. You see modify position. So over here, you see your ticket number, your lot size, and your price you bought from. And then the type of action you want to do now is to modify a position. So you don't just come here to the stop loss. What is our stop loss? 1.06160. Then our take profit is 1.05212. Then you click on what? Modify. So you now see two red dotted line or dashed lines appeared on the screen. Okay. Then the bottom one is the take profit. The top one is the stop loss because we are selling. Now, if it is a buy trade, then the bottom line would have been a stop loss. Then the top one would have been take profit. That's the two different things. The colors look the same. Now, those using PC with this trade, you can be able to know how much you are losing. So based on the 0.05 I used on this particular trade, in case it hits stop loss, I'm going to lose $24.9. In case it hits stop loss, I'm going to lose $24.9. In case it hits TP, I'm going to gain $22.5. Now, when you look at it, you can be able to tell the risk to reward ratio. The risk to reward ratio, according to this signal, is 0.98 against 1.0. That's the risk to reward ratio, which means that when the trade hits your stop loss, you will lose more than when it hits your take profit. But it's equivalent to 1:1, probably because as we execute the trade, there is a spread that was deducted. Okay, so that is what the information we are currently seeing on the chart. Okay, so that is how we take a trade. After you take the trade, you can modify your position by setting your stop loss and or take profit. Now, the second aspect of trading or way to execute a trade is to click new order. Now, on new order, the symbol is the euro US dollar or euro versus US dollar. And the type of execution, we have market execution. That's instant. Once you place buy or sell, you can just, market will just start running for you. That's the market execution. Then when you look down, we have pending order, buy limit, sell limit, buy stop, sell stop, and so on and so forth. But I want to deal with market execution, right? So you set your stop loss, your volume, which is your lot size. So let's say I'm now entering, okay? So let's say I want to use 0.5. Okay, then I'm setting my stop loss, 1.06160. Then I'm putting my take profit, 1.0521. Now, maybe you are someone who keep record. So you want to write a comment. So maybe I'll say ICX signal. Okay. You want to know where you pick the trade from. In case you go well, you want to review your trade or go through your trading history. You are able to know where you take this particular trade from. So, okay, then what do I want to do? I want to sell. That is how it is. Now, what you can now see is that those of you who have an account less than $100, okay, and you go and use 0.05, and then the trade hits stop loss, you are losing $24. Let's say average $25. That's 1/4 of your equity, which means that if 4 trades hit Excel, you are done with trading or you have finished your equity. Now, you have you have less than $100 and you want to use 0.5. Let's see what happens. Let me see if you can give me the value because they are almost the same. So you'll be losing 24 times 10. That's 240. So what you will see along the line is that your trade will be going up to a point they will give you margin call, probably if it is not going in your favor. Some of the brokers, when we come to leverage, may not even allow that trade to be executed based on the leverage the broker gives you. So this is how simple you can execute a trade. Now, the third way is probably you don't want to open the chart. So you can just right click on Euro USD, just click new order direct, and then execute the trade. That's also another way of entering the trade. Then how do you close the trade? Very simple. You just click on the cross button, which is close, and the trade will close. Maybe you are someone who is trading with a target. Your target is $10. Maybe you are trading with $100 and your target is 10%, and that 10% is $10. So as the trade got somewhere here and give you somewhere $10, $15, you want to close the trade manually. You can just click on the cross or the plus, the time, the multiple sign, or the X, and the trade will close for you. Now, there are two types. Those who are using, we have what we call one-time clicking. Okay, I have set one-time clicking for this particular window already. So once you click it, it is going to close the trade automatically. But those who are not using one-time clicking, when you click it, another pop-up will come, something like this, for you to say close the trade. So if you close it first, it will not close until you re-close it here again. That is the different experience you have. But if you want to set the one-time clicking, once you click on this buy or sell for the very first time, you install your MetaTrader platform, either 4 or 5. It will give you a prompt and a warning notice or a disclaimer. You read that disclaimer and then you accept it. After you accept it, you have activated one-time option trading, or once you click any of this button, it will take the trade for you, which also means that you can't click here and tell the market that I mistakenly closed the trade and I shouldn't have done it. Okay, so that is how you take the trade. Any asset they gave you, as far as your broker supports it, you can execute that trade as far as your broker supports it. So if you are receiving a signal from a group of people like ICX, you must be able to know the asset they trade and choose a broker according to that asset. You don't choose a broker that doesn't support your trade. That is also what will determine if you are going to use MetaTrader 4 or MetaTrader 5, because the quantity of assets traded on MetaTrader 4 on hot forex is different from the quantity of assets traded on MetaTrader 5 on the same hot forex. Okay, so you have to take your time, go through what the broker is offering you, understand where you are trading from, make sure the conditions assigned or that goes with those the requirement of the broker matches your trading style. Okay, you don't just start trading and you'll be like, okay, my mentor is using FBS, so I want to use FBS. My mentor is using Pepperstone. I want to use Pepperstone. My broker, my mentor is using Oanda, so I want to use Oanda. When you don't know the conditions that goes with them, for instance, Oanda is one of the brokers that if you don't even trade for some time, they charge you for no trading. So let's say you are not aware of that. and then you want to create a live account with Oanda, not even a demo account, a live account, and you didn't trade for some time, and you don't even know how much they will charge you per day for not trading. Then you now hustle. You went to hustle and look for money, and you now put into it, and then they took it out. So you have to consider all these things before you make a decision to trade. Okay, now let me talk about something very important here. So when we now look at our trade, currently we are seeing negative value. Okay, that is right. And the total negative is 5.25. Now I have opened 2 positions. Please, it is not advisable, especially based on your equity. Now, this is a demo account, practice account, and the equity is $10,000. So if the 2 trade hits stop loss, I'll be losing somewhere $260 something. When you subtract it from 10,000, I can still trade tomorrow, or I can still take the next trade. So if your equity is not big, open 1 position. Allow that trade to end successfully, or until you close it, you open another position. Don't just, maybe the signal service you are following, they give like 10 signals within 1 minute or 5 minutes. Then you force yourself to take all. As you force yourself to take all, maybe one is going well and the other is not going well. And maybe the ones that are going well are not, their value does not supersede or overpower the one that is not going well. Hence, you'll be going somewhere, then they will tell you you have margin call, which means that the equity, you can now see free margin and the margin level. So the margin level for this account is 17,320 something, and it's what? It's just fluctuating, or it's going up and down. Now, the margin level depends on your negative value. That also affects your margin and your free margin. So if the trade is going into profit, you'll be seeing changes in this value. Now, how much are we losing currently? We are not losing all the money we have deposited in our trade. And not because you have set stop loss and take profit, the only money at risk in this current trade is how much we will lose when market hits stop loss. A lot of people get the twist that trading is risky and you can lose all your money in a day. It is because maybe when they explain the concept to you, they didn't clarify this part to you. So when you are trading and you set stop loss, it means you have accepted, you have decided that on the bad note, this is how much I am willing to lose. That is why when we are trading, we deal in percentages. You don't quote profits values on dollar value. Yes, you put it on percentage. Okay, so my equity is actually $1,000. That's correct. But at the end of the day, my target is 10%. That's my target profit is 10%. And my loss I'm ready to accept maybe is 2% or 3%. So as you start the day, you already know how much, in case market just change direction against you, you are willing to accept as lost. That is one beautiful thing about trading. Even those who go into option trading, binary option, expert option, IQ option, and all those options, even those who go into that type of trading, you lose the amount you bid with or you bet with, which has disadvantage against forex or manual trading. Now, manual trading, You enter the trade, all right. You are seeing negative 0.05, negative 3.0, giving you a total of 3.05. And then you have added some few indicators, or you've added some few stuffs and realize that, this trade will not go well. For instance, you have this, my setup, this an indicator, okay? And you realize that, with this, I don't think market will go towards the direction I'm expecting. What do? You can close it. You are only losing that negative when you realize it. But you hardly get those opportunities in option. And that is why, personally, I recommend, even if you love to trade option, master Forex, manual trading, before you go to that side. It helps you see the safety side of trading. Okay, so this is one very important topic I want us to look at, and then understand how do you place the trade. So those of you on my Telegram platform, from today, I believe you know how to place the trade from today. When the signal is given, once you download your Meta, whether you have a broker account or not, once you download your MetaTrader platform, whether 4 or 5, default, MetaTrader gives you some free funds to trade, even without a broker. MetaTrader gives you some fun. So you can even pick the trade and observe what will happen. But when you pick the trade, try to monitor, use your eyes to be able to tell what is happening. When you click here, what happened? What didn't you see? You now saw. Or what didn't you saw? You now see. What didn't you observe? That has appeared. A lot of people, the major problem they have with learning is that they do the things without observing what they've done. They do the thing without observing what they've done. Okay, so that is it. Now, another important thing to look at is that the signal was given to you with a time frame. Okay, now, what is the purpose of the time frame? The purpose of the time frame is to help you understand the conditions that validate the setup. For instance, I'm zooming in this. Let me just take off the tick. So I zoom in this particular setup. Okay, let me just show you guys something quickly. Now, you are a trader or you are just a new trader. At least you know what is support, you know what is resistance, at least. So what you can do is that zoom in the setup a little. Zoom in the setup a little and just do some few observations yourself. So for instance, when you look at this particular trade, we have a market coming from the top and it came down to this level. After it came down to this level, it went up here, and then it's looking as if it wants to buy, it wants to sell, and stuff like that. Now, and then I'll give you a sell signal. What can you observe to tell you that the possibility and the probability that this trade is going to go the way you expect it? So you look at it and say, okay, with A, B, and C is a valid setup. Then you take your trade. Now, when you practice for a very long time, you can even do that observation in 2 seconds, just with your eyes. For instance, this was a support broken. And then this whole area became a resistance zone. That is one confluence. That is one reason why this sell is valid. Now, it also doesn't mean that the trade will expire in an hour. Okay? When they give you, let's say, 15-minute time frame, you see nothing has changed. The only thing you will see changing is the way the arrangement of the chart looks a little bit different. But direction or expected direction is the same. And it doesn't mean that the trade will expire in 15 minutes time. It's only telling you that each particular candle, each one candle displays what happened after every 15 minutes. So if you see 10 candles on 15-minute time frame, it means that each 15-minute detail of a particular asset times 10 is what you've seen, which will be equivalent to maybe 2.5 hours. So four 15-minute candle gives you 1 hour candle. So if you see 10, that is 2 hours, 30 minutes detail. So when you go to 2-hour time frame, you see all the 8 candles becoming 1. All the 8 candles becoming 1. Then you see another one forming based on the time structure. Okay, so that is also one important thing you should know. So this trade, 1 hour, is just helping you to be able to validate the setup that on the 1 hour candle, I observe A, B, and C, qualifying that the setup is valid. That is what the 1 hour or the time frame means when it is given on each and then every signal. Okay, now professionally it makes sense. Professionally it makes sense. It helps you make sense out of what you're doing. Sorry to say that, but that's the truth. It helps you understand the algorithm or the methodology behind the setup. Now, we can backtest this signal. Before this current signal is giving, let's say this particular candlestick is 8 o'clock Ghana time. Okay, so this is 7 p.m., 6 p.m., 5 p.m., 4 p.m., 3 p.m., and this is 2 p.m. So now, from 2 p.m. or from 3 p.m., you've seen how the candlesticks are forming. That is if you are someone who understands candlestick formation and how to apply them. So we saw this candlestick, this candlestick. This looks like a bullish candlestick with a name. The same thing here. And this market couldn't make major decision. And they are giving you a sell signal here. Okay, so with the 1 hour, 2 hour, 3 hour, or the previous candlestick that formed, telling you how market behave, now gives you the probability of how market will move next. Okay, now if we put 1, 2, 3, 4 together, when we go to 4-hour time frame, this will become one candle in that order. Okay, so that's what you have to know about the time frame when it is given to you. So like I said, or I always say, it's more simpler and easier than you thought. We just keep scaring ourselves that trading is very difficult and stuff like that. Okay, all right, so that is it for how to use the MetaTrader platform, which is the common asset charting system that everybody will need along the line. So let's look at trading view. What I use to do analysis more often. Okay, so this is just a setup or a charting system that gives you more advantage, okay, over MetaTrader. One of the greatest advantage, but goes with activation or going to the promo pack, is that, let's say you did not see how, you don't understand how market move from maybe this particular point to this place. You can replay it. You can replay to see how the candlestick move, price action. Is there a news? How the news react? How market step and all those stuff. That is also an advantage it gives you. But I see, as you are beginning now, you don't need to invest any much money into something you don't know its purpose. Okay, I have a reason to spend some $20 a month for that service, but you may not need it now. So you can use the free tools available now for you. Okay, when you also have it, you can also do what we call paper trading. Okay, if your broker allows you to link their system to a trading view, that can also be done. But don't really worry yourself right now for that. You can just use it to do your charting. We have the different types of chart types. You can use the bar, candle, and line is the common charting types you see on the MetaTrader platform. But on the trading view, you have a lot more you can actually do. You can also set alerts. Okay, with it you can set alerts. Probably you expect market to do something at one particular point and you want to set a reminder. You can also do that. Those are few advantages that it can give you. Okay, so we have gold. We always analyze gold when we always look at gold because that's what I love so much. It can break your heart at the same time give you joy. So that's just by the way, but not to scare you. All right, so currently 4-hour time frame, gold is actually descending, and then at this particular point, it's consolidating. So if you're a 4-hour trader, you'll be waiting for solid confirmation to make the next move or the next decision. But those who are trading on 5 minutes, 1 minute, 5 minute, 15-minute time frame, they're able to do their scalping with this view. As it is ranging between this level and this level, you'll be getting their money from that side. But those who go with 4-hour time frame confirmation or daily time frame, all these plays, they will not make any decision. They'll be waiting for a break below or a break above to make their decision. Now, if you follow the class keenly, you'll be able to master all these things and get the concept and practice them more, and then you become better. Okay, trading view also helps you to easily understand the short and the long position, okay, and its stop loss. For instance, let's say I'm going for short somewhere here. I'm going short, and then my target is somewhere at this level. Let's say my stop loss is at this level. This tool gives you automatically, you are able to know your percentage risk to your percentage earning. So you are risking 2.44% based on this stop loss and take profit, and then you are winning 8.82%. Okay, so if you look at it from standard lot size, you are risking $750, and then you are earning $19,902.17. Okay, now let's assume you have a big account, and then you are risking that. Then you can also bring it down to the lot size, your account size and its positioning. So these are all advantages it gives you. And then you can also draw projections and then leave it and see how market react towards it and then what happens to it at the end of the day. So that's also one advantage as well. So this is the bearish. So sometimes maybe I do analysis and then I drop it on any of the group chats, Telegram or WhatsApp, and you see something like this, it's already telling you that this is a bearish move or an expected sell. And then this level is our stop loss, this is our entry, and this is our take profit. If we have multiple take profit, then we are going to indicate it. And then we say, oh, take profit 1, take profit 2, take profit 3, and maybe take profit 4. Okay. Now, how do you do that? How do you set take profit 1, 2, 3? There is only 2 ways. The only thing you can do is to set your stop loss and take profit. Now, as market is moving, you can adjust your stop loss. Yes, you can also move your take profit by changing the values. What mostly is required is that, for instance, we give you a signal here, a sell signal, and then we expect market to go to 1800 as the first, 1760, 1720, and then 1679. That means that when market move to 1800, you can leave it or move your stop loss to your entry level. Then when it moves to 1760, you will move your stop loss to what? 1800. Which means that even if market reverses all of a sudden, you have broken even or you make some few profit. Then when market moves to 1720, you will move your stop loss manually to 1760. Then for that one, you leave it. The probability is that it hits the 1679 or hit your stop loss. And at that particular point, you're still going to make some profit out there. All right, so that is how the advantage trading view also give. I love using it so much because it makes a lot of things easier for me. So for bullish, yes, we call it a long position. It also goes this way. It can also help you know your target. So when you see the opposite way, this is the bearish and this is bullish. So when you see this way, it means that this is the entry point, this is the stop loss, and then this is the profit target. Okay, so sometimes you just see a signal like that, you should be able to know what to do. All right, so that is why I now explain it to you. All right, so let's see what is happening in the crypto market. Those who came on the other day, we have this zone on there. The total market cap and price is still within the zone. Okay, so we are still expecting that. So let me bring it down to this level. We are still expecting. When we look at the structure forming here, those who know what we call patterns, we are looking something like inverse head and shoulder. Okay, so whenever we see an inverse head and shoulder, we wait for a confirmation on the neckline, and then we expect a bullish move. But at this point, we have a multiple support created at this level. This is the lowest support created in this region. So if a low is created, I said it on Wednesday, yeah, on a Monday or so, Monday or Wednesday. If a low is created lower than this, it means that market is not ready to buy. So we have to be looking at how the lows are being created and being regulated at this region to know when market is going to push it. Okay, so that's for the whole market cap. And I always let you know that it has something to do with the market cap. Okay, the coin BTC. Now BTC, this is on daily time frame. Currently, you must be looking at a bigger time frame because anybody here or who wants to trade BTC will be looking at how long it will go. Hey, will it go back to the 60,000 plus and stuff like that? So now BTC has created a higher high, which is the highest, 68 something, and it still didn't go to the lowest. But from the previous data from 2020, it still didn't go to the lowest yet. It didn't create any lower than that. So if BTC is validating this bottom 17,000, let's say 17,000 thereabout, then we are going to stay focused on how the reaction will go. Okay, how the reaction will go. Now, let me go to 4-hour time frame and show you guys something quickly. Okay, so at this particular point, we have seen structure being created. Okay, so market came up and then it's currently on this level. If BTC tested this level here, the blue line up this level here, it means that we are expecting it to create a high higher than 21,000. So we're expecting somewhere 22,500 at this level. Now, when it goes to that up, and push down and test somewhere 20,800, and give a confirmation, it means that probably the bullish move has started. Now, you can't just see this move on this bullish move when it went as low as 17 to this level that it has changed direction or confirmation is due. Right, high risk traders, those of you who learn the martingale trading, where you have to split your equity, they would have already been got their first entry on 17K and be in that small profit. But the probability that will come to this zone, somewhere 15,000, will be based on the reaction that happens here. And we have to look at the weekly time frame candlesticks formation to be able to validate those information. Now, when that happens, our next point of concentration will be this week it created here. That's 2,500, 25,000. Okay, that'll be our next concentration. Now, how BTC reacted here will now tell us if it is going to go to 30,000. Now, when it gets to 30,000, definitely it has to consolidate a little while. So if it consolidates and break above the level of 32 and cross to 3,500 and cross, let's say 32,500, then the probability of it moving to 37,500 is high. So that's the projection and how BTC is expected to react the upcoming days. I'm not confirming the bullish yet because personally my zone ended on 15,000. That's 15,000 is my major support level. So if it should bullish up and go straight without if it should bullish up and follow proper or the lay down technical analysis, then we are going to expect something like this after we get our reversal pattern. Okay, so what I am waiting for right now is a reversal pattern, and that reversal pattern has to happen on a bigger time frame, not on a smaller time frame. Now, if you see a double bottom on a 1 hour time frame, that is going to just give one leg for 4 hour time frame, giving one leg to daily time frame, giving one leg to weekly time frame, giving one leg to monthly time frame. But at least get your confirmation on at least a daily and the 4 hour and the daily time frame. Clearly, the reversal pattern, either W, extended W, double bottom with a confirmation, inverse head and shoulder. We are not expecting cap and handle at the moment for BTC. We are expecting any of the reliable reversal pattern flowing with supply and demand, and then some few other block strategy at that particular point. All right, so aside that, for accumulation, we're going to be looking at somewhere extended W. So the first W will be shorter, the first low will be shorter, and then the second low will go longer than the first low, which will hand some stop losses, and then finally confirm on the previous high or the previous low, then we get a bullish move. A lot of people will be like, they are not really getting it, but that is how it's going to be. And once you keep coming to class, you will be getting the update, which means that BTC will not pass your left-hand side. All right. Currently, a lot of people are happy. I have a friend on Facebook. He's very happy for BTC to come as low as this level. In fact, he's wishing he stepped down to 10K. Why? Because this is the a resetting time for everybody that can put at least $50. When you buy at least $50, you see the value of BTC you will get. That same value will not be $50 when it gets back to $60,000. You'll get that ratio. Okay, so that also doesn't mean you should just jump into it. Test the water. Okay, you can put in, let's say you want to invest $100 in BTC. You want to invest $100 in Ethereum. You want to invest $100 in whatever, Litecoin, whatever. What you have to do now is that as it creates the low and consolidating, you can put $20 or $30. Okay, you have accepted that you want to buy BTC $100. But what you should do is that put in maybe $50. Or if you want to follow the martingale, then you have to put in $20. Now, when you create a lower than where you bought your $20, and you get another good confirmation that, okay, this time I is going to buy, you can now buy another $30. Now, after that $30, maybe, who knows, market can just start pushing up from that point. So if you get your full confirmation, you can buy the rest. But if you still go low than the point you bought your $30, don't forget, you have just put in $50 and you are left with $50. Then you finally get the last low and buy from there. Which means that by the time price gets to the $30 level, the $50 value supersede all the losses. And you can now hold it from that level and make a lot of money. Okay, this is supposed to be a VIP advice, but you guys just got it for free. Okay, so now as BTC will be going up, you have to take point of concentration, which we call levels and key levels. So this is the first key level, 29,000, 29, 30,000, 28, this whole range. Let me annotate it. So this is our first point of concentration. Then middle point of concentration is this level. And third point of concentration. Then once it breaks 60K, you'll be expecting a little bit low, somewhere 52K, then break above and keep it going. But it's not financial advice. Do your own research before you make any decision, because I am not a financial advisor, but I'm giving it to you based on technical analysis point of view. There is no fundamental analysis here. We don't really do analyze too much. We only project it. But one thing you should also know is that when a market price is moving, it moves based on how it comes down. Okay, that is one structure or one style that gives you the nature of the market. Okay, so what you learn here, you can apply it on any of your favorite crypto asset that is on your watch list. And I believe the martingale is going to help you to take advantage of the next bullish move. But the bullish move will come. If I don't sleep and wake up and see it at 29,000, then you'll be hoping that it will come back. It will never come back. Before you realize it's 48,000, which means that you did not learn from the correction. You did not take advantage of the bearish momentum. After a bearish move, we are expected to buy. But when are you supposed to buy? That is what you have to be watching out and be attending your classes Mondays and Wednesdays. All right, so that is it for for today, anyone here from Monday, we were analyzing an asset which I want some of you to buy, but I don't know. I forgot it. It's close, and I can't really figure it out. So that is how you can execute a trade. Very easy, very simple. Then, like I said, always go by what works for you. And the best indicator I can give you is how your eyes, what you can see. Okay, what you can see is the best indicator. You don't follow what a lot of people are saying, but you have to also observe. Somebody can give you a buy signal, maybe on gold. They give you a sell signal at 1837, but you observe and realize that this thing is not going to buy. It will sell. You won't enter the sell. You will buy and you will make the money. But always know that when market is moving upward, you do correction before it keeps going. And don't buy on correction. Buy after correction. If you are selling, don't sell before correction. Sell after correction. Okay? So what BTC is doing here, it can be a correction. Okay? So those of you who know how to apply Fibonacci tool, you can use it to spot your ABC pattern and then get the consolidated part, or to know if it is a correction or it's a reversal. So thank you so much for your time. If there's any question, let's use the next 15 minutes maximum to address the question. You can raise up your hand and then I'll call you.